everyone. New guest to face. I've talked with Dean before, Dean Christians. I love Dean's work because he really looks under the hood. He was putting out some warning signals about the market with some of the breadth numbers that he was getting and some very unusual things that were happening in the market over the last 3 weeks. So, welcome to Face, Dean. Glad to have you. And uh, why don't we start off with what you and I talked about a week ago? Things are manifesting to the downside. Do you still call it a hold market?
Yeah, I've raised a little bit of cash. My main risk off composite triggered a signal Tuesday on the close. And so I, had to take the steps of raising some cash. So yeah, I mean, I would not be initiating any new positions here. And I put that out 2 weeks ago to subscribers saying, hey, look, we've got a few new signals here in the risk off composite. I would hold off on any buying. And, that's turned out to work out well if people adhered to that. And then again, this week we had a few more signals. We got a composite signal, risk off signal. And again, I've raised a little bit of cash in the PAs. And, I think we're just sort of in a wait and see mode right here. If we see further deterioration, then, I would raise some more cash. But, things, I would say the good news, Dale, is so far, we haven't seen an expansion in 52-week lows. So we saw a few instances where the S&P triggered a signal. The S&P 500 financials triggered a 52-week low spike signal. But since then, we haven't seen those 52-week lows expand back out, which is a good thing. Now, again, a lot of it's just kind of related to the fact that we have this
Well,
two-sided market,
yeah,
right?
maybe maybe those ones that have been making new 52-week lows for quite some time are already washed out, and now what's made the averages look good is vulnerable. Things like Nvidia and Palantir and the beloved issues that were driving the rally unwinding here. So
Exactly. Yeah.
that
And
it?
but
Okay.
for those stocks, you're not going to see, most likely not see 52-week lows, right? Because
No,
they
no.
move to the upside so much. Okay.
Yeah,
But you
yeah.
could see an expansion in 21-day lows or 63-day lows, something of that nature. So yeah, I wouldn't, and look, unless this is a 15 to 20% drawdown scenario, you're not going to see a big expansion in new lows probably at this point, because again, this is again, what we saw was a sort of general weakness in
Right.
the staples, real estate, so stuff that's sensitive to the interest rate environment, some other areas, insurance and stuff like that. Then they started to take down sort of those non-profitable tech stocks, and so those all peaked out about a month ago. And now what they're doing is sort of taking out the leaders, right? So any sort
Yeah,
of incremental bad news or perceived bad news, right? So you look at like MCore down like 18% on its earnings because they didn't say enough good things about future expectations, or even Palantir, trading down like it has. Just at the margin, things are so stretched to the upside in all these AI names that just any sort of incremental bad news and they're all going to get whacked. But structurally, they still look okay. They've had these sharp down moves here.
well,
But
do you
but
think a 10-15% correction, which is what I talked about when we were last together, is becoming more possible because of
well,
what's happening this week?
yeah, I mean, look, you can't rule it out. If we take out that pivot point, remember the big down day on October the
Yeah,
10th? I mean, if we
yeah,
were to go down and undercut that, it could snowball. And when I started to think about this, in some ways it reminds me of Q4 of 2018, right?
Oh
So
yeah.
we had a Fed policy mistake, right? And the market
Right.
just swooned during that seasonally strong period when it's supposed to go up, right? Remember, everybody's saying we're
Right.
supposed to be going up now.
The Kramer
Um,
rant. The Kramer
right.
rant. Right. Yeah.
And so the policy mistake here is the shutdown, right? And nobody's willing to budge. And this thing just keeps dragging on. And then we keep seeing, incrementally bad economic data, right?
Yeah.
And then that just all snowballs and feeds on itself. That's, to me, that's worst case scenario, right? Okay,
Yeah.
is that this is a policy mistake and gets exacerbated just by a big position unwind. Everybody's trying to protect their profits in these AI related stocks, and it just snowballs. Now look, we could come in on Monday morning and the market's going to gap up 2% because they have a deal, and the
Yeah.
shutdown's over, and then you got to reassess. Okay. But for right now, I think you have to err a little bit on the side of caution here that we could just continue to sort of see a slow dribble down. And then again, like if we were to break that 10-10,
Yeah.
support,
65.20.
yeah, that support area for you to break that, then, you could open up the door for, the market, potentially going back down to,
How about here? The prior all-time high.
yeah, the old high. So that'd be 6150 or something. I mean, again, that's not my base case or anything, but that would be the worst case scenario of downside risk,
Okay.
and something like that.
All
So
right. Well, I wanted to ask you, do you think the CEO of Palantir needs a good IR department, investor relations? Did you happen to catch his talk on CNBC about that, how upset he was about uh, his stock being attacked by puts, and that he has made the little guy in America rich, and that they're a great company, and it really shouldn't they shouldn't be picking on them because of what they've done for America. And what they've done for America is made surveillance an art form. So methinks thou protest too much. Is that the way
well,
it feels to you with this Palantir guy?
listen, I don't really like to get into those type of discussions. I mean, look, Michael Berry has a fundamental view of the stock, and he's expressing that fundamental view via a bearish put position. I don't think
Yeah.
there's anything wrong with what he's
No.
doing.
Yeah.
And so look, that's happened throughout history. Whether it works out or not, who knows?
Yeah.
And as far as CEOs go, I mean, at the end of the day, I think they should probably just put their head down, keep grinding, working hard every day, and if they do the right things, their stock's going to go where it should go. But to get into these sort of public, debates and arguments and what have you about who should be doing what, and I just think it's kind of nonsense, to be honest with you.
Okay. I think that the VIX is flashing a pretty important signal, closing over 20. It's above all the moving averages, put in a higher low. Does this give you even more caution? For us to get back to 28 could happen.
Well, yeah, I think that the 28 scenario is again, we undercut that support from October the 10th.
Yeah.
I think that would be it. I don't know. I'll probably go take a look at it today, but it'd be interesting to see like how many times the VIX is above 20, in November, or even December. Again, during that
Yeah.
sort of that seasonally strong period. When you're in an uptrend, and how many times has it popped up above 20 or 25 or something? That would probably be pretty interesting to see, which I may look at after we hang up here.
Okay.
But you guys were talking about gold earlier, and I think we had discussed this earlier. I put out a note saying, hey, be careful here in the short term. Could be some sort of short to intermediate top. I mean, even the historical data indicated a significant top, but But again, I think the jury's still out on that. But I will say this. Let me, Dale, is it okay if I share my screen?
Oh, that'd be great. Go ahead.
Okay, let's go ahead and we'll take a look. So I've got a okay, here we go. Let's see. Where's the screen?
You know, Dean's got, I think, over 120 years of data that he, looks at things that,
It's not.
outliers of things that haven't happened, like, where they were selling
Yeah,
off the staples. Have staples recovered during the sell-off, Dean? Because everyone hated them a week or so ago.
yeah. Hang on one sec. Let me find
Yeah.
this to share. Oops. Okay. Can you see this screen, Dale?
Did you click share on the
Hold on.
bottom?
Let me go
That's
back. Uh, let's see here.
it's a green icon that says share at the bottom of the screen.
Okay, there we
And you
go.
click
There
that.
we, yeah. Okay.
All right.
All right. Yeah, well, we can take a look. We'll take a look at staples in a second. But anyway, so this is my dual trend system. I have a long-term version and a short-term version. And what you can see, these are all the gold and silver miners, is obviously the long-term version has stayed bullish, right? If we scroll down, you can see the vast majority
Yeah.
of these stocks are bullish. The trend scores are high. You see the trend and the relative trend. All of these are 90, 100. So it looks good. Short term, though, what we've seen is a lot of these turn negative. And again, this is a shorter term model, but what you can see is most now have moved negative, or close to turning negative. So I think it's really important here for gold and for silver is we need to hold where we are right now. Otherwise, we're going to see more of these short term signals turn negative, and given the big move they've had up, you can't rule out even further downside just as a position unwind. I mean, if you look at something I was looking at, like, First Majestic Silver, I mean, it's down 30% now off its
Yeah.
high.
Yeah.
So again, it probably needs to hold right around this area here, or this thing could be unwound. So pretty critical here in terms of what's going on in terms of gold and silver. And it looks like to me like we're trying to hold,
Yeah.
and
Moving sideways.
yeah, so we've got a sort of sideways movement. We got the 50, we're still above the 50-day, at least in GLD. So, I think we need to probably hold that rising 50-day, and I think we'll be okay. And then, then what I'll look for is for these short-term models to sort of kick back into gear and switch back to bullish. And then that'll be a pretty good indication that the uptrend is resuming. But if we don't see these things turn back up, then then we need to reassess. But okay, so in terms of the staples, let's go take a look at the S&P 500.
And I also wanted to ask you, do you view Bitcoin in any type of correlation with for risk and liquidity that plays into your thinking about the whole puzzle of the markets?
Yeah, that's a good question. I mean, yeah, you hear that quite often, this, oh, well, it's a risk asset, it's going up, therefore all risk assets should be doing well, or it's going down, that's a warning. Um, the problem I just have with Bitcoin and really, all the cryptos is just, there's just not long enough history, right? So,
Yeah.
if we could go back and make comparisons to, say the early, starting in the early 90s, and see multiple bull and bear cycles across stocks, across crypto, I think you'd have a better case to say, yeah, it's a good tool to use in terms of risk on or risk off. But I just don't know if that's the case. And one thing's for sure with the Bitcoin is, look, it's not trading now how it used to trade. Okay, the up cycles seem to be shorter. The down cycles are still pretty violent and bad. But what we're seeing is as it becomes a more mature sort of asset, is just
It,
those
it's
up
been
cycles. There's up
yeah.
cycles are just less and less, and this is
So
really
the Yeah, the
Uh,
institutions ruined it for the retailers, huh?
yeah, and to that point, I had a guy reach out to me on X, and he said, "Hey, what are you doing? I'm thinking about I want to move over and trade stocks. I've been trading crypto, and it's just too difficult now. It's hard to make money in crypto." And so, look, I don't know whether that one person, whether his view is the view is a view of everyone in crypto land, but again, if it, there's so much risk on those downside moves, like what we saw, with these liquidations recently, that, if you're
Yeah.
getting blown out down 30, 40, 50%, and then the upside, right, is only 20, 30%, your risk reward is just not great. And I think that's what this guy that reached out to me is saying, is this: the risk reward for trading Bitcoin and these other, cryptocurrencies is just not there. The upside is just not there compared to what could happen on the downside during these liquidation events. So, again, that's my 2 cents. I don't know whether I'm right or
Okay.
wrong, but
No,
look, so
appreciate it.
yeah,
Go ahead.
so let's look at the staples here. Again, if you look, pretty much across the board, everything is bearish. There's a few handful of names here: Monster, Estee Lauder, and stuff. But generally speaking, when you look at the consumer staples, they're weak, and you're not even seeing, like, these my short term model. You're not even seeing any of that kind of stuff
Yeah.
turn up at all. So this is a group where, it's an avoid for me. Really, it's only something that you start to think about in bear markets, where you just want to, you're an investor that has to be allocated to stocks, and so you need to then gravitate towards consumer staples. And don't hold the ones that are super overvalued. But yeah, I
How
don't.
how 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 about interest sensitive, Dean? The bonds yield started to drop. They've backed up since the cut, but they started to drop yesterday. Is there anything in, like, I know utilities aren't a rate play anymore, but I think REITs are, or not much there either, mainly
Well,
bearish.
let's take a look at the REITs. Yeah, so if you look at the REITs, I mean,
Nothing.
pretty much
Yeah.
across the board, it's pretty bearish. I mean, there's a few things here: Prologis and Welltower. So here, this is interesting. So again, REITs have just been pretty much a place you have not wanted to allocate. But my system here in Welltower picked up a buy signal 379 days ago. It's up 99% since that buy signal, and it's outperformed the S&P by 65%. So,
Wow.
again, there's these one-offs, that you can find in these sectors, whether it's real estate or whether it's staple. There's probably a few more one-offs in the healthcare area. And you can find, sort of a diamond in the rough in these sectors. But the general rule, Dale, is in an uptrend you want to be in the cyclicals, right? So you're in tech, you're in industrials, financials, and consumer discretionary, especially if it's early cycle. You want to be in consumer discretionary. So that's the area where I tend to focus the most on. When we're coming out of a low like April, I'm looking at nothing but cyclicals. I don't care about any of these defensive groups whatsoever. But
Okay.
again, if you're someone that's running a diversified portfolio, you can certainly look in here, and again, you'll find one of these sort of names like a Welltower or something of that nature. And you can have some small positions, but it's not a place that you want to be overweight or even really market weight.
What I like about your work, Dean, is you're like Gretzky. You're not, you're skating to where the puck will be, not
Right.
where it is right now. So we're in a correction right now. You brought up one positive, that there weren't a lot of new 52-week lows on a down day yesterday. What else will you be looking for that's going to tell you that this correction's close to being played out and that the uptrend would resume?
Well, look, I've got a number of composites and indicators that I looked at that'll tell me whether the market's oversold or not. And so I'll be watching those. But we may, again, it's hard to know whether we get that, sort of oversold condition we're looking for. Again, a lot of these stocks, the average stock, again, X, the whole AI trade, a lot of these stocks are pretty, they're down and washed out. I mean, they are oversold. So you could make the case that, there's a lot of stocks that are oversold, even though, the broad index is trading 2% off of a high,
Yeah.
so, now whether those stocks bounce, and outperform the broad market, that remains to be seen because, again, this AI trade is so entrenched, right, in the mindset of investors and traders right now that, again, that's most likely where everybody's going to go right back to, especially if they sell these things down and they're down 20%, but structurally they still look good. On the charts from a long-term perspective, people are going to go right back to those names. Again,
like 140, like Nvidia at 140.
Hold on, let me pull up. I'll just look at a chart here. Yeah, I mean, look, whether it gets to 140 or not, I don't know, but you could certainly make the case if this is a correction that Nvidia is just going to come back into its range that it was in, right? So
yeah,
between, let's call it early August to sort of mid October, I mean, it was just range bound, right? And then it had that pop up. But look, I mean, again, this chart is obviously it's a $5 trillion market cap, so it's mirroring the S&P 500 pretty closely. I mean, you have this breakout, and if this thing comes back down and undercuts 180, then you're down at 165-ish or so. I mean, it could be, they call it, what do they call this, Dale? A bull trap, right? People buy it and then it just completely fails, and then they're forced to immediately sell. It'll be interesting.
Don't you think people are going to be buying the dip all the way down, even if we have a correction? I mean, I'm sure there are people that thought yesterday was a buying opportunity.
Yeah.
Or the last couple, right?
Yeah, no, they will. Again, that's my point is people, it's so entrenched in traders, investors' minds to buy the dip, and especially buy the tip in these tech stocks. That's where they'll go. I mean, at the end of the day, I was talking to someone the other day, like, if you look at the 3x levered ETFs or the 3x levered single stocks, I mean, they're all growth tech stocks. I mean, they're not coming out with 3x single stocks that are, steel companies. I mean, it's Nvidia, it's Apple, it's Amazon. So all this stuff just feeds upon itself.
Είμαι σίγουρος ότι σύντομα θα το δείχνω.
When the crowd gets going,
γιατί αυτός μέχρι μεσημέρι θα ήταν χειρουργία.
It feeds upon itself.
Steve, mute yourself, please. Thank you. Okay, well, Dean, I'm glad that I was able to introduce you to our community, and hope that you'll return. I have like a 3-4 month rotation where I just bring back people that I know are edifying people when they come in, and hope you agree to it. And your reason for starting Turning Point Market Research.
Look, I've been in the business before and really just wanted to do something on my own, be a business owner, and and really show people this is how I manage my money on a day-to-day basis. These are the tools, these are the indicators that I use, and really, show people that, it's something that works. So.
Okay. Well, I've become familiar with you over the last 6 months, and I like your work, especially since you see things before the market recognizes it. And almost every statement that I've heard you talk about is balanced, not hedged. Yeah, it could go up unless it goes down, but if it goes down, it could rally. That kind of analysis. So do you have rooms here, or how do you communicate with your subscribers?
Just via our blog. So we have, we post research notes to our blog, and we have other communication methodologies. But we just launched just a little about a month ago, and we're looking into some sort of subscriber chat service, and so we'll get that up and going, whether it's on Discord or something else. That remains to be seen. But yeah, we'll have a chat service. Also, Dale, I want to mention, I've got a free chart of the week series that I typically put out on Saturday mornings, and it's just sort of a theme, idea, event that caught my eye in the week. And again, you can go sign up for that and get that each week via email. But
where on the website?
Yeah.
Okay.
So if you go to our website, there's an area there where you can sign up for that. But I wanted to mention it because I think people are going to be really fascinated by the chart of the week this week and what it's showing, comparing current environment to the environments going back all the way to 1920. So if people want to get that, go register for that free chart of the week. This week's is going to be an eye-opener.
Okay, so where on the website can they find it?
Let's see. Let me go find. You should
on
be able
the blog.
If you go to the home page and you scroll down, there it is, all the way at the bottom on the home page, Dale. It says "Get our chart of the week," and you just pop your email in there. And,
beautiful.
Yeah.
All right.
Yeah. So
there you go. I look forward to receiving it, Dean, and look forward to talking to you again and keeping in touch during historical period in our country and in the financial markets. And it's good to have a watchman like you out there looking under the hood for people and not looking at the obvious. And I'll tell you, it's Friday, Dean. I feel as old as your historical data today.
It's been a long week, huh, Dale?
Yeah. It's they get. Yeah.
I think you need to wait a few more hours before you pop that beer open, right?
All right. I promise. I don't drink and trade. But
yeah.
Dean Christians, follow Dean on. Would you rather have people go to your @Dean Christians X handle or to the new handle for Turning Point?
Yeah, I would do the new handle, which is @TPMR Signals. But yeah, you can find that on X. Yeah.
Okay. So have a great weekend, Dean.
Yeah, thank you. You too, Dale.
Thanks for alerting me to some of the negatives that were happening before price action confirmed, and appreciate it. You're a pro.
Thank you, Dale. Appreciate you having me on.
All right. So that's Dean Christians, everyone. Follow him on X. Check out his chart of the week. And have a great weekend, everyone. Don't just count your pips, count your blessings. We'll be back here Monday. Aren't we lucky? We get to do it all over again next week. So adios, Dean, and see everybody, and enjoy your weekend.
Have a good weekend.
Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.